Hello, this is Steve Ramona, your host for Doing Business with a Servant's Heart. I want to thank our sponsors, InPhone, and with InPhone, you can place your business on everybody's cell phone, turn their business into a web app, and with a click of a button, they'll have access to you 24/7. And also Pantheon.fm. Have you ever thought about monetizing and taking your podcast to the next level? Well, Pantheon can do that. Let us show you how. Reach out to Steve Ramona, the host, at inphone.co/SR1, and I will go over with you how you can make your podcast really stand out. Let's enjoy the show. Thanks again, everybody. Welcome, everyone, to Doing Business with a Servant's Heart. This is your host, Steve Ramona, and I'm excited. I was telling our guest today before the show how I love investing. I'm a Forex trader, been doing it for over 4 years. And this is one of the experts that studied this since 91. A lot of you probably weren't even born then. So this guest knows what he's talking about with investing and crypto and currency, trading and different things. James, welcome to the show.
Hey, great to be here. Yeah.
I could have kept talking about it. I got to stop and I want to listen to you. So you know my interest in Forex. We've talked about it before and before the show. Talk about your interest, why you got into this.
Yeah. So my dad was a scientist. He was a physicist at DuPont. And back in the day, he had this gadget in his laboratory called an oscilloscope. And what it did is it turned everything into a wave. So as you know, sound is a wave, light is a wave, electricity is a wave, even gravity is a wave, right? And these are all different types of energy. And as I saw him work with this, I sort of wondered, is social behavior, is social energy a wave as well? And that's what I started to apply to my work in investing.
Interesting, wave. I never thought of it that way. Explain that a little bit more.
Yeah. So the idea is that everything has a rhythm, a pattern, a sequence. And if you can understand the rhythm, the pattern, the sequence of things, sometimes you get an understanding of what happens next, right?
Yeah, that's good. Yeah, because that's a big thing. It's, it's not like looking at candles and people look at it and go, oh, there's a candle going on. I don't know what's going on. And it's like a playbook. And that's probably not the best analogy, but
it is.
Is it a good analogy?
Yeah. I mean, that's all about finding patterns in the markets. And that's one of the really interesting and almost addictive things about investing in speculation is that it's not completely unpredictable. Okay, it's not completely random, but it's not completely predictable either. It's kind of somewhere in between, right? And what I do is I bring in a fairly substantial toolbox to figure out what happens next. And the tools that I use will depend on the time frame. Okay, so if we're going really far out, 10 or 20 years, I put on my futurist hat, right? And I look at these big steep trends, social, technological, economic, ecological, political. If we're going out 3 to 12 months, 3 to 3 years, we're going to be looking more at fundamentals, valuations, economics, business management, etc. And if we're going on the day-by-day stuff, all you have to do is all you've got is the technicals. You've got the price action, right? Yep. And that's how you anticipate the minute by minute, the day by day.
We can go down a black.
Understanding this, how you trade some of your currencies, right?
You're speaking my language, and we go down a black hole, a deep hole with this, where we go out to people like, what are they talking about? So my question is, can anybody do this? I know they can because I was anybody who's never done it before, and I've been doing over, like I said, 4.5 years. And I'm not perfect, but I know today much more than I did 4 years ago. Is that the same for anybody in this audience that's listening?
Yeah, I think it's like chess. It takes like 10, 15 minutes to learn how to play chess, but you can play it for your whole lifetime and never completely master it.
Yeah.
And when I started, I really wanted to have sort of a textbook of how do you figure out what happens next in the markets. And it didn't really exist. You can find some things on technical analysis. You can find things on technology trends. You can find things on accounting, but you couldn't find everything all in one place. So I had to write that book. And this is it. It came out a year or two ago, Foresight Investing, Complete Guide to Finding Your Next Great Trade. And this is the book that I always wanted. And it was my COVID project. So I had to
Oh,
get
that's
serious during lockdown. It's like, yeah, we're going to finish the book.
I'm writing that book down because I thought I just looked at my thing before the show. I got to order that because, and let's talk about, James, here's the problem. There's all that YouTube stuff, and you get stuff in the mail, and you get the ads. Trade with me and make $26,000 your first month, or in months you're making this. What do you do different than that people are seeing on these ads and videos?
Exhaustive testing, right? So a lot of people think that trading is responding to what you saw on Reddit or to what was written up in the Wall Street Journal or what Kramer said on CNBC. And the response, that time frame is within milliseconds. You can't respond to anything because there are bots that have already done that. Okay. So you have to anticipate the setup. You have to anticipate the timing before it even becomes news. That's where we are right now.
What do you think, a newbie, a rookie, and do you work with people that have never invested in this type of way? Do you work with people like that?
Yeah, I work with individuals, yeah, and families, and I've been I've been doing that for 30 years.
And what are some of the ROIs that have come from some of these people you work with? They're probably doing it part-time. I don't want to speak for them, but I would assume a lot of them are doing part-time to make some extra income.
Yeah, I see a lot of people do it, and your your experience may vary, depending upon when you do it and what the market conditions are and the amount of discipline that you have. When the market is bullish, everyone's a genius, and it's real easy to make money. When you have a year like last year, nobody's a genius because pretty much everyone's losing money. So it's a matter of how do you figure out if this is a game you want to be playing or not, if this is the right time to be playing
That comes in market timing, which we talked about earlier.
That's part of the market time.
Yeah. And how many different bullet points for that? That's just not the only thing. There's a multiple things with market timing that people need to be aware of when they're investing and trading.
There are, but I'll tell you the really big one. Okay.
I'm writing this down.
Yeah. So I used machine learning to optimize my market timing models, and we'll nerd out a little bit. I hope your audience doesn't
nerd away
about this, right? And sort of the idea is when I started market timing, I was kind of like an Italian chef who had a little bit too much wine, and I knew how to make spaghetti, but sometimes I'd add a little bit too much garlic. Sometimes we'd, forget the pepper, my numbers were kind of all over the board. So what I did is I used machine learning to tell me, first of all, what goes in the sauce. Okay. For example, you need to have onions, you need to have peppers, you need a lot of tomato sauce. What doesn't belong in the sauce? Marshmallows and gummy bears, probably not spaghetti sauce. Okay. And then by using some of these AI tools, I was able to figure out the right proportions for each ingredients so that I could create the best forecast for the market. And that's how I time the market.
I'm loving it. You're selling me like crazy. So explain forecast for the everyday, the layman on this that's listening to this show. What's that mean?
Yeah, forecast is a direction or an indication of direction, right? And ultimately, anyone who's trading the markets, the answer is up or down. Is it going up or is it going down? It's very binary, okay? On or off, 0 or 1. And there's a lot that can go into the forecast of an up and down forecast. And a lot of people apply these techniques to any number of things, okay? So the same technique that you would use to forecast a political election is the same technique that you might use to apply to a drug trial, which is the same technique that I use to analyze the market. It's called a logistic regression. You look at a bunch of ingredients in the sauce, you see if you have the right mix, and if it scores above a certain level, you've got good spaghetti sauce. If it's below a certain level, it's not going to work. Okay.
Yeah.
And the same type of techniques you'd use in forecasting an election, I use in forecasting the market.
So it tells them when they can get in and when they shouldn't get in, or when they're in to get out.
That's correct. I put together a calendar for my subscribers that tells them on a day-by-day basis for the next 3 months when they need to be in the market, when they need to be out of the market. You can actually plan your vacation schedule around my trading calendar, which is kind of unheard of. I mean, nobody does that. It actually can give you daily probabilities every day up to 5 years in advance.
Wow.
Which
That's
is
impressive.
Amazing. Yeah, yeah. So these are really persistent cycles. And I wanted to talk about the most significant cycle that's driving the market right now. And this is the long-term cycle that I use. It's called a kitchen cycle. And it's 183 weeks long. It's also known as the business inventory cycle. And when you test every market cycle, weekly cycle going from 3 weeks out to 300 weeks in length, this is the one that has the most impact for both strength and fit, okay, when you run through the whole thing. Now, when I did this, it's like, great, we have a 183-week cycle. What does this mean? What does it correlate to? And as I said, it correlates to these business cycles that have been around for a long, long time. So this cycle was originally discovered in 1920, okay? And it still exists today, and it's still the dominant cycle for the market. Now, what does this cycle say about the market? First of all, it came out with a big buy signal January 1st of this year, okay? Which was what kicked off the current bull market before it was even a bull market. I mean, everyone was kind of wandering around depressed last January saying, is it ever going to get better? And it got better. And that cycle continues to be very strong, specifically until about March or April of 2025. Okay. So there's a lot of factors that go into this forecast, but that's the big one. And it's a cycle that's been around for 100 years. All right. So this is not news, but it's something that people don't pay attention to, and they probably should.
Yeah. Yeah. That's big. That's like giving the secret sauce.
One of them.
Yeah.
That's just one ingredient, but yeah.
Exactly. No, there's many more.
It's a big one.
Yeah. It's a start. So what would you say to somebody that comes to you and says, I want to get in investing, I want to do trading? How do I start?
How do you start? I would start one with my book. I mean, obviously, I think that's the best place to start. I do a nice job of combining a few different schools of thought. One, looking at the technicals, which I think is probably the most useful tool for active traders. Two, being able to look at the accounting and the earnings statements and balance sheets and all of that. And then three, kind of looking at the big picture opportunities coming up down the road. Now, people can be successful doing any one of those three things, right? And then it's just a matter of finding out what type of investor are you. And I make a distinction between traders who are going to be in and out, fairly short time, and investors who are going to have a much longer holding period. They're actually two different disciplines.
Yeah. Do you use Forex futures, options, stocks, crypto? Do you use all of those? Or you share all of those? How do you work that in the mix? Because that's got to be a decision as well, right?
Yeah, yeah. And for my clients, I'm only going to be doing publicly traded investments, meaning ETFs, mutual funds, stocks, and I do some options as well. From a regulatory perspective, futures are a whole different thing. That's a whole different regulatory board. But I think that a really savvy trader is going to spend a lot of time thinking about how am I going to set up this trade? Okay. What's the right vehicle to do it? Because as you know, being a commodities guy, if you're short term, there's some big incentives to use futures just based on how they're treated from a tax perspective. It's huge. And the leverage that you can get on futures, it's huge. So for what you're doing, yeah, that's probably the way to go.
You help people distinguish what they want to do, or you stocks and bonds
and manage it. Yeah. Generally speaking, I just manage it.
Yeah. If there was one of the, I know you mentioned crypto, so we'll get into that. If somebody came to you and said, "What should I trade?" Stocks, bonds, options, futures, forex, crypto. Is there anyone in particular, or is it all it's all per personality of the person?
Yeah, a lot of it's tied to the personality, and a lot of it's just risk management ultimately. And one of the most frequent mistakes that I see is people don't manage their risks appropriately, and they just burn out. They just run out of capital because they see all of this leverage and say, "This is fantastic." They see the upside, they don't see the downside, and they end up wiping out their account. And you can't do that. So I'm a big fan of making a lot of mistakes, but keeping them all survivable. Okay. You want to be around long enough to win. And small mistakes, fine, go ahead, make them, but you shouldn't let anything sink you. And that all talks about money management discipline, right?
So well
beyond
said.
Diversification, it's money management.
Yeah, and I know exactly what you're talking about. That's a lesson, a hard lesson I had to learn. And learn negativity is good because it's going to go against you, and you just have to have patience and mindset. You'd mentioned before the show, mindset. Talk about that a little bit.
Yeah, well, I'm a big fan of disciplined investing, okay, and quantitative systems, because you can measure them and you can see if they work or if they don't work. And you can also back test them to see if they give you the results with the volatility that you find comfortable, And it's to a certain degree about finding the right style of investor. And one of the things that I do with my new clients is I don't have them fill out risk tolerance questionnaires. Kind of a heretic in that regards. I don't believe in risk tolerance questionnaires because everyone's aggressive until they lose money. And when you ask people what their financial goals are, they're going to say, "I want growth, I want income, and I want absolute stability." And like, no, you can't do all three of those. So I kind of look at this and say, hey, we're all a little bit schizophrenic when it comes to our money. Okay. We all have multiple personality disorder. So I kind of gamified the whole process. And I have an investor personality profile that says, these are the 10 characters running around inside your head right now. Okay. And some of these characters tend to want stability. Some of them really want growth. Some of them just want to hide under the bed. Okay. Now allocate points to each character based upon how they're reflected in you. Okay. And then you can build portfolios around that. In essence, you're getting clients to allocate their own portfolios based upon these personalities.
Personalities are huge. That's so good because you can learn about Steve Ramona and go, "Hey, here's what I've learned from this test. I suggest this type of investing for you," because that's what you're comfortable with.
Right.
Okay.
It's
very
a fit.
cool.
You're looking for the right
fit. So let's talk about what you do.
Mm-hmm.
So you don't teach me to trade. You're going to take my money and invest it for me, correct?
That's correct. Yeah.
Okay.
Mm-hmm.
So that's why the personality test is important, because people will go, "Well, if I'm not trading, why do you need to know that?" But if you need to know me because you got my money, you want to make sure I'm either aggressive, moderately aggressive, or very non-aggressive.
Yeah, we like to keep our clients,
Yeah. That's a great one.
Yeah.
That's so true. Because that's the problem. I mean, I hear all the time, I've talked to people, "Yeah, I took 10,000. The guy taught me how to Forex trade, and it was gone in 3 months." And you said that earlier on this show, which I love.
Yeah.
Be a discipline. But how important, because we're running out of time here. We're going to have part two because there's so much more to get into. But how important is it to have James Lee take care of my money investing than me going out going, I want to save the money on James. I'm going to buy stocks and sell stocks myself.
Sure, sure. So I do some active trading in client portfolios. Really, what I do is I follow what's called a core and satellite approach. The core is going to be buy or hold, and satellite's going to be sort of the active in and out part. So I do both. But for the most part, people work with me to manage uncertainty. Okay. So we can't always predict what's going to happen next, but we can have a sense of what's happening. The way that I look at it is a trend until it ends or it bends. And cycles tell you when trends will bend and when they end.
This is 30 years of investing. What you just did right there is break it down to our level, to a new investor or somebody like me. It's learning how to invest, because I think that's important, understanding what you do, right?
Yeah. Yeah, and it's a lot of fun, and I'll just keep doing it. But yeah, I'm always happy to chat. It's www.stratfi.com, STRATFI.com. I'm Jim Lee, happy to chat anytime. I have a free initial consultation for anyone who's interested in having a discussion.
You read my mind. I was just going to have you do a shout out, and you read my mind. I think we're in the same, thinking of wavelengths, the wave, we're on the right wave there. We're on the bull wave. And I'm going to do something for my audience for you, James. The first 3 people that reach out to you, audience, mention the podcast or my name, doesn't matter. Just refer to me, and I'm going to send them a $20 Amazon gift card.
Oh, wow. Thank you.
You're very welcome. I love what you're doing, and we're going to talk more. There's a lot of bad investing companies out there. I've seen some of them. We don't want to talk about anything like that, but money is so emotional, and it's got to be with the right person. And I love your attitude about how you do it. You simplify it, but you make sure you understand that I understand what you're doing. I may not be doing it, but it's not like wake up and I lost $50,000 and the next week I made 50,000. You're walking me through like, here's what I did, educating me.
Right.
Yeah. It's so great. Well, thank you for being on the show. I want you back. I'm so geeked out right now. I'm so nerd right now. I'm loving this. But it's been great information that you've given. And it's just been, people need to understand this. There's money out there they can make with the right person. And this fear of COVID and recession and economy, reach out to James, get a $20 Amazon gift card or not. But if he made you thousands of dollars, I think you'd be happy you heard him on his show. So with that being said, what's a piece of advice you can give my audience in their journey investing in life?
Yeah, the best advice is to get started early. Right? Start saving as with your first job. Okay, just as a general rule of thumb, if you have a retirement plan at work, if you have access to an IRA plan, 401k plan, 403b, the magic number is typically about 10%. If you can put 10% of your income into a retirement plan when you're in your 20s, you are on autopilot to have a successful retirement.